Shout out to Snowball, our incredible new sponsor, a private community where top entrepreneur investors share private deal flow, wins, tough lessons, strategies, get advice, and so much more. Check out www.snowballclub.com. Let's grow together with Snowball. Hello, and welcome to the How to Exit podcast, where we introduce you to a world of small to medium business acquisitions and mergers. We interview business owners, industry leaders, authors, mentors, and other influencers with the sole intent to share with you what it looks like to buy or sell a business. Let's get rolling. And now a moment for our sponsors. I want to highly recommend you get Acquisition Aficionado magazine. Every month, Acquisition Aficionado magazine brings you tactics for business buying and selling you won't find anywhere else. Learn firsthand from industry leaders who share their success stories, featuring in-depth interviews and stories from leading figures in the business acquisition industry. This multi-platform mobile magazine speaks to acquisition entrepreneurs wherever they are in the journey. And I want you to visit acquisitionaficionado.com today. Hello and welcome to the How to Exit podcast. Today I am here with Ross Turner, and I think I started it on my own business name, How to Exit Podcast. I think I said How to X. And we're here today with Ross Turner. Ross, man, I'm looking forward to this conversation. You've done some incredible things over your career, and especially in the last 12 to 18 months. You've got a really cool project. I heard about it on a seminar. You were doing a seminar or a short
Mm.
webinar, I guess you call it, on how you did what you did, and we're going to get into that. But I thought, man, I got to get this story out there and let people know that this is possible. Here's a guy doing it. Let's start off with your origin story. Kind of the joke's always, hey, you were born and you ended up on a show about mergers and acquisitions. How in the hell did you end up on my show? Could you fill
Right.
out that little gap in between there?
Yeah, I could fill out that gap for you. I've had a very eclectic kind of professional career. I've always been in the digital marketing direct response space. I was like one of the original guys. I've been in it since 2003, probably. And me and my brother had a business in the UK, which we ran for up until 2013, end of, which was pretty successful. We were doing multiple seven figures, but there was no we couldn't scale it. There was no scalability to the business for several reasons, the industry that we were in. And in the end, I was just burnt out, Ron. I said, I just gave the business to my brother. He's still running it. And I just sat, I remember this vividly. I sat on my mum's sofa for like 4 weeks. I was like, what am I going to do? And serendipitously, how I've even ended up here, one of my mentors who I learned to write copy from, Andre Chaperon, autoresponder madness, great copywriter, great human being. He sent out an email on behalf of Steve Gray that was essentially looking for an intern. And the email was, "Are you my next Amelia?" And I read it, and I knew Steve by reputation at the time, right? He'd he runs blood pressure solutions at like $80 million a year. I was like, if I can work with Steve, and I knew that he was one of the premier people that drives traffic, right? And the thing about being in this space is if you know how to write copy and offers, and if you know how to drive traffic, you don't ever have to work for anybody again. So my thought process was, if I can work for him for a year, then I can go and just basically write my own ticket and do my own thing. So I sent him all of my 7 years worth of material. And he actually had a recruiter at the time who was recruiting. But then he phoned me and he said, listen, he said, you are way too experienced to be an intern. I was going to pay someone $25,000 a year up here in Dallas. He said, but I've got a business partner and a business in Austin. He needs some help running that business. And would you be up for it? So I'm Googling Austin. I'm like, obviously I've heard of Dallas. I'm like, where's Austin? So I look at it and I said, sure. So my thought process at the time was, right, I just turned 30. I just started seeing my girlfriend, who is now my wife, and she plays quite a big, large part in this story. I'd only been seeing her for a couple of weeks, and I said, hey, I'm going to go and move to America for a bit. Do you want to come for a vacation? And she was like, okay. So and she's 10 years younger than me. So my wife was like 21 at the time. She came out with me and I was the fifth employee in that year. We did $2.2 million that year. By the time I had left, we got that up to 35 million. And I built teams of about 40 people in that business. And that's kind of how I ended up in Austin, right? Ended up in Austin. I was kind of plugged into all the digital marketing scene. I kind of know everybody there is to know because I soaked it up like a sponge. This is like where I wanted to be. I was meeting people who I'd followed and, all that kind of stuff. And it kind of just grew from there. Like I fell in love with Austin. Me and my wife both did. Like I don't think we'll ever leave, to be honest. We are so settled here. And it was just it was a wild journey. That first like 90 days, we were and to be completely frank and honest, we were, as we say in England, piss poor, right? So we actually used £5,000 of my wife's university tuition that she'd saved to like get us set up over here. And it was wild. We had no furniture. We slept on the floor of our first apartment for the first night. But it's all these kind of learning, humbling, growing experiences that kind of shape you to kind of the man that you end up becoming. So we just fell in love with Austin. Company was great. I'm still very, very good friends with the owner of that business. Like he's essentially like my brother. Him and the other guys really helped me out. We had a great support system here in Austin as well, which is very important. And without those people, we wouldn't have been able to kind of stay here, I don't think.
I would just
I,
say, I don't think you could have picked a better place. I mean, if you think of all the I've been all around the United States. I've lived in everywhere from Hawaii to Texas. I've been to Austin a few times. If you randomly landed in a place to the United States and you wanted to be in love with you want to love it and stay there, Austin's one of the you could have just there's probably 1,000 other cities you could have landed in and it would have been much worse.
oh, for
It's
sure.
I think Austin's probably one of my top 10, maybe even my top 5 favorite places in the United States.
So as we were kind of in Austin and I'd left that company and I'd started a couple of my own things and I ended up consulting for a group out of Carlsbad. So they flew me down to San Diego, La
Mhm.
Jolla. Like we were working on some pretty huge projects, one being Kylie Jenner. So we were working on some of her stuff and they brought me in to kind of consult on that. And they wanted me to actually move to Carlsbad and like head up their team. And I said to my wife, I was like, this is quite a great opportunity. Well, she's my girlfriend at the time, but she said, this is a great opportunity. And she just said, look, we're moving to Austin. I'm not moving to California, even though it's absolutely beautiful. The weather's great. Like you say, politics, but it's not great for business because you get taxed, double taxed. So we picked the right state.
Let's jump into where you're at now. What are you working on right now? Because that's how you ended up on the show is you're working on
Sure.
something I thought, "Well, that's really incredible what you're up to."
Yeah, we kind of touched on this a little bit off air, and it's an interesting story, right? This is 100% true. Much like yourself, I've spent probably hundreds of thousands of dollars on education, and I said before that I bought Roland stuff, paid 10,000 for that, and I just couldn't make it work. I couldn't get it to click. And serendipitously, I was CEO of a supplement company, so I was doing that and unfortunately, in 2021, my father passed away. He died,
Mhm.
and I hadn't really had a relationship with my father, so I was surprised that he left me a small inheritance, 12,500 pounds. But at that time, because we were kind of in similar direct response groups, right? I ended up kind of building a friendship with Carl. We were just chatting, like he gave me his number and I phoned him on a Sunday and I was just asking his advice and he was great with his time, right? Like he gave me all of his time, advice, what I should be doing, stick to your lane, all this kind of stuff. And we kind of became friends. And then one of the things that I said to him was, I said, I'm going to give you access to Roland stuff. Have a look, see if there's anything in there that you think's interesting. I said, one thing that they're doing incredibly well is they're doing this challenge. You guys could do that. I'm telling you, it'll crush it. So he did do the challenge, and I ended up in a roundabout way helping 7x their business. So as we became more friendly and we were talking further, he was like, "Hey, let me comp you in to Dealmaker, which is now Protege." And I said, no, I said, don't do that. I said, because if you comp me in, I won't even look at it. I'll never use it. There's no value attached. So I sat down and thought about it. And I didn't tell my wife this at the time either, because, I'd spent tens of thousands, hundreds of thousands of dollars. And I took the $7,000, which it was back then, out of the inheritance I got from my late father. And kind of the rest is history. So I came into
Mhm.
it. It was structured in a way that resonated with me. It was easy to progress because they gamify it. One of the good things is they put people in teams and they
Mhm.
track all of your stuff to make sure that you're actually doing the work, right? The hardest part, I think, about all of this is just making a start. Right? When you making the start, I think people fear kills more people than anything else, right?
Mhm.
The fear of failure, the fear of starting, the fear of what if, it literally takes people's lives, right? They're too scared to make a start. So back then, at that time in the business, everybody was having like a welcome call with Carl. He had like a one-on-one welcome call with you, and he was super patient and like he bugged me. I didn't really do anything for about 6 months. And he was patient, but he kept trying to bug me to get me on the phone. And I was like, all right, let's have this call. And it'd been about a 6 month time period. And then I turned around to him and I just said, yeah, I think I'm going to start buying digital direct response e-commerce companies. I think Carl's funny. And he was like, thank God for that. He said, the pennies finally dropped. He said, I've been waiting for you to come to this conclusion for ages. Then he turned around to me and said, let's partner. He said, I'll partner with you. So I was like, whoa. So I said, all right, let me think about it. So we partnered. And then he phones me on a Sunday. He's like, hey, what are you up to? Can you jump on a Zoom for 10 minutes? So I jumped on the Zoom and he built out this model, this huge model. He's walking me through it. And he said, this is how we create $1 billion enterprise valuation. And things have changed. Obviously, it's pivoted slightly. It's actually, and I hate to say this because I don't want to sound like a douchebag, but with the model that we've now built, it's actually nearly a $2 billion enterprise value corporation. But he walked me through it, and it was up to 16 deals over 6 years. And as I was looking at it, like I know from running big teams and building big teams, the biggest thing that makes these roll-ups fail is integration and operations, right? You have to have world-class people to do that. The rest is fairly straightforward, but if you don't have that dialed in, it will fail. Just simple as that. So I said to him, I said, listen, let me think about it for a couple of days. I really need to think about it to see if I think we can do this. So just because of the people that I have in my network and the industry I've been in, I kind of knew a lot of the key players. So I got some advice. I was speaking to a bunch of people. I spoke to some operators and integrators because we run our business on EOS, right? So
Yep.
we're very
Yep.
fastidious with that. And a couple of days went by and I messaged him and I said, all right. I said, yeah, I think this is doable. And listen, I'll be honest, Ron, like when we first started doing this, the ego, it's like, oh, $1 billion company, right? Oh, wow, amazing. It was all about that. That's kind of what turned it. But then Carl turned around and said, all right, we'll go and figure out how we make this work. And you'll know this being a marketer yourself, right? I
Mhm.
didn't want to have a massively broad audience because the communication, the story, how we cross sell would be far too difficult. So I needed one audience. And essentially, our project is we're just buying a massive customer base, right? Across 6 different pillars within the industry that we're in. So as we pulled more research, because Carl was like, go and figure out how we make this work. So he left that to me. And I quickly realized after about 2 weeks that women are the super buyers. They spend 7 times more than men. They're stickier. They're a better customer. They're loyal. They share more. They
Mhm.
control the house purse strings. So I was like, right, that's going to make it easier. One audience, 25 to 45. Now we were conscious of obviously the economy and kind of everything that's going on. So we needed the project to also be recession proof. So we started pulling all of the information, and then we quickly found that women in the health, wellness, and beauty space, it's been growing year on year, like 90% essentially. And it grew by 45% during COVID. So it's bulletproof, right? But then obviously we've got a bit of a problem. Like as we're kind of building this narrative and I'm building the story, and we'll kind of talk about that in a bit. Like I settled on the tagline: women own businesses for women by women. but there was a bit of a problem. There's me and Carl, who were two middle-aged white guys from England. It doesn't really resonate with the story. So we had to figure out a way to essentially not just make this a story and narrative, but to verify it, make it real. And we kind of worked that as soon as we get to $10 million of EBITDA, we then have enough runway to employ a full woman C-suite. So CEO, CMO, CFO, COO, all women, and they're going to drive that to the $1 billion market cap. And we just become shareholders then. So we put together our first deck, and this is the first time I'd ever even thought about raising money. I don't come from this background. I don't know anybody in the industry. I have zero connections, and I didn't really know the lingo, right? Like, every industry has its own vernacular and how they talk, and I had to learn it. Like, it was learning on the job, right? I was neck deep in it at this point, and I just learned by failing, right? Like, I'm having communication, conversations, I'm being introduced to people, and I'm kind of getting schooled along the way. Like, I'm lucky in the respect that I'm getting an MBA in business from Carl. As part of our kind of S&C filings, he had to disclose every single deal that he's worked on, and he sent us the list. And I was like, holy smokes, like all the deals that he's done. So I get that element from him, and I'm like super grateful. He's becoming quickly one of my best friends. He's a great person. But he just let me get on with it, right? He's like, you'll learn more by failing. I just went at it. And then we created our first deck. And if you see the first version compared to what our version looks like now, you'd laugh. You can tell it was created by two guys. It was all blue and masculine. And this never happened. And you know this. We pitched this again. This all started from, as corny or as cheesy as it sounds, this is how it happened. I literally looked through my phone book on my phone. I was like, who can help me? If I tell them what I'm doing, who can like put me in touch with someone? And a good friend of mine who lives in Dallas, another English guy, Paul, like renowned trader, used to work on the life floor in London. He's done tons of acquisitions. He's raised a bunch of money. So I messaged him and said, hey, like, this is our project. Do you know anyone who might be interested in it? And he put me in touch with a family office in Dallas. And then me and Carl pitched him. I won't say his name because if he watches this, he might text me. But we pitched him 3 different times. And during those pitches, the first one, he was in his car. And I'm like, what? The second time, he's in a coffee shop. And then the third time, his kids run in and he cuts the call. So I'm like, is this some sort of power play? So I phoned up Paul and I said, Paul, is this some power play? Like, I'm not feeling this at all if it is. And he went, no, it's fine. And we had an email 24 hours later. It was a 1 sentence email. I think you guys are onto something. Let's do it. So the deal back then was $10 million of equity because we worked it out. We needed about $50 million of buying power to get us to 10 million and then phase two. So it was 20% of the company for 10 million. They said, I'm in. They showed us their, proof of funds, capital commitments, contracts, boom, signed, done. But then serendipitously, what he did was, and I'll call him Dallas family office man, he's very smart. He's a young guy. He's just turned 30, but he turned around a couple of other family offices. But what he did, which always stuck with me, was he spent $5 million of his own money to have access and get meetings with every top CEO, fund manager, Fortune 500 company on the planet. He'd pay them $100,000 for a 15-minute meeting just to introduce himself and say, hey, like, my name's Dallas family office man. I don't have anything for you right now, but I wanted to introduce myself. Is there any way that I can help you? And if I have something interesting in the future, can I pick up the phone? And he built a massive network. I'm talking like Saud and sovereign wealth funds. Like, he showed me proof of funds for $55 billion from Credit Suisse. Like, that's how
Mhm.
connected he was. And then he opened up his network of people. And then he kind of put us in touch with company out of New York. They're called Global Emerging Markets, GEM, and the managing director, Gregory Van Beek. Now, me and Gregory and the team have since become friends, but Gregory cut his teeth in the Russian capital markets. So he speaks fluent Russian. He's a very sharp, very dialed in guy. He's quite intimidating when you first meet him. And then we pitched him, and again, this never happens, right? We pitched him one time I didn't know this prior to this, but he turned down 50 deals and he hadn't done a deal in 3 years. So we pitch him, we're two-thirds of the way through this. And he says, guys, let me stop you. He says, I absolutely love this. I love what you're doing. But he said, you need to stop saying females and start saying women. He said, I have three daughters at home. And every time I say female, they tell me off. And he's like, I love this. He said, I think this is incredible. He said, how much do you want? So again, this is the only time I've ever been unprepared since then. So I blurted out. I was like, we want $150 million. So we laughed. And he went, let me go away, speak to the management team, and we'll see what we can do. So he came back about a week later, term sheet for $125 million. And then from term sheet to contract, that took about 6 months. And as the clock is ticking now, that contract's been signed for a year. So the good thing about global emerging markets is that we can access that money when we become a publicly listed company, but they have a vested interest in the growth of the company. So they're long only, right? And they can't
Mhm.
do anything with their shares for 5 years. That's in the contract. They have a vested interest in the growth of this business. So when that happened, our capital call from the family office was December 2022, and they missed it. Unbeknownst to us, they were selling their family office to another family office. We're getting their money from LPs, and they missed it. So me and Carl kind of had a decision at that point, and we decided to pull it. We're like, look, they missed their capital call. You're not getting 20% of this business. We've signed a shared subscription facility with Jim. We've got 125 million. We can probably leverage that to go and raise more money. So then we ended up obviously with 100% of the equity back in the business. And then the deal that we had with that family office was, it was $10 million for 20%. We'd give them a 30% redemption premium. So when we hit certain milestones, they get 3 million back on top of their cap. And then we were at a dealmaker event randomly. And if Wes listens to this, hey, Wes, he's the guy who kind of like started this next evolution. Big real estate guy, really, really sharp investor. We signed the contract randomly at the event. So people like got to see it. It literally popped in my inbox and I signed it on stage, which is quite cool. And it just happened that way. And then Wes approached me and he's like, hey, are you looking for investors in the business? And I was like, to be honest, I haven't even really thought about it. Like, I don't really want the hassle of dealing with individual investors. And then I went and spoke to Carl and he said, why don't we just give these guys the same deal as the family office got? Like, but shorten it up. So he said, let's portion off 15% of the business. We'll sell it for $100,000 a share in Topco in the equity. We'll give them the redemption premium when we IPO. So you get your money plus 130 back. Then then you keep your 1% equity all the way to the exit, which at the time when we modeled it out, all things being equal, and we know that things never go to plan, right? But all things being equal, that's worth roughly around $10 million to these people. So obviously they'd seen the contract. And then as we kind of started talking more and more about it, and again, you know this, right? And I stole this from Alex Hormozy. It's like, I wanted to create an offer that people would feel stupid to say no to. So on top of that deal, I then also said, for those of you who come in to the seed round right now, I will roll you into my next 9 future projects equity on my money. And they were like, oh, wait, what? I said, if you come in right now, then I'll roll you into the next 9. And that's kind of like how it kind of snowballed fairly quickly. So we ended up raising about 1.5. Me and Carl obviously put our own money into it as well. So we had about $2 million kind of like in the bank. And then when the deal got pulled by the family office, Carl was like, all right, well, let's go out and try and raise this money. And here's the thing, it took me about 60-ish days to realize that it's much, much easier to raise $50 million than it is to raise 5 or 10, because the process is the same, right? The work is the same, the underwriting is the same. But for the guys writing these checks, there's not enough upside for them. So like when they're getting presented with all of these deals, they'd rather do the bigger deals with bigger upside and bigger fees than do a 5 to 10 million equity check. and I banged my head against the brick wall for at least 60 days, right? I was having like meeting after meeting, and Cole actually stayed in my house, and we had a week of meetings, me and him, and we just got punched in the mouth, punched. No, no. I was just like, oh my God, this is ridiculous. I was like, our thesis, our model, everything has been validated, but we couldn't seem to kind of raise the capital we needed to get the 55 to get us to 10 million of EBITDA. And then it's same thing, right? Like I just use my network of people, and Devon, if she watches this, he's the owner of Dark Horse Capital Partners. Well, I'm about
Mhm.
to be a partner in that business. She opened up her network, and literally I got to see behind the curtain of kind of how high level finance works. So one of the big things that we were very conscious of it was redundancy, right? After the family office kind of pulled out, and from our standpoint, right, it's like the first time we've ever gone and raised any money. We're building this relationship with the family office. They've shown me proof of funds. They've signed the contract. But then, because of my first rodeo, how much do I push them? Right? I was just kind of like, give them the leeway. I didn't want to piss them off, and they
Right.
say, no, we're not doing this deal. But for the second time around, we wanted redundancy. We didn't want one horse in the race. So when we came to the realization that it's easier to get a bigger check, and again, and it was on another podcast I was on last week, someone made a great comment and said it would be great to know the equity positions that they've given away, because as you know, startups, and even though this is a roll up, technically it's a
Mhm.
startup, right? Founders and owners give away like 80% of their equity, and then they end up working for nothing. Well, we'd already modeled that out. So we knew what we were willing to give and what we weren't. But then what we found out as we kind of courted all these different groups, it's also super easy to go and raise debt. So at the end of last year, 2023, so it kind of took us like a full year to get everything ducks in a row. And at that point, we kind of we know from experience, or from basically living it, that guys who are kind of putting capital into these deals, they look at the team. They're like, does this team have a track record of success? Does it have a track record of returning money back to investors? Do we think they can execute on this? So one of my key focuses, and what I had to go and do, was I had to go and build a world-class advisory board, right? And then of course, as I'm talking about women-owned businesses for women by women, I have to be very conscious of that. So we have a full female legal team. We've got a full female CPA team. We've added the original founder of Grubhub, Adam Burke, onto our board. He's had
Mhm.
3 publicly listed exits. We've added Crystal Carson, who's our head of capital markets. This week, I don't know if I could technically say this yet, but I have a verbal yes from the ex CMO of Sephora to come on and be an advisor. And I've got 2 more prominent people. One is the mayor of Miami's wife. He wants to be on our board, and I'll kind of talk about that in a minute. But we built that world class team. So when we started pitching these specific debt funds, like we have at the end of last year, we had 4 term sheets, each for
Mhm.
$55 million. And we looked at it, and none of these term sheets were equity based. None.
Oh,
There's
that's
no,
cool.
we're not giving away any equity. But the first one's project finance based. It's a 10-year term at 8% interest with a balloon at the end. So obviously we had to go through all the KYC, we had to go through underwriting, due diligence. You know what that is like. So
Mhm.
we had the term sheet at the end of last year. And as it stands right now, we are at like all the red line for the contracts are done, and that's ready to ink. And then the other group who we decided to go with in the end, 2 we said no to, but the other group, these guys create corporate bonds, and they've been doing this since '95. And I've seen the SEC filings, right? So we had to go and do a bunch of due diligence to verify everything. And they've done $8.9 billion in bonds. So what they do is they back, in our case, it's $55 million. So they place $55 million into an escrow account. That
Mhm.
gets turned into a bond. The bond then gets sold into investors into Wall Street. And then that bond also gets insured. So if anything happens, all the investors get their money back. And it's backed by cash. And like, I didn't know about any of this until I started getting into this world. And I was like gobsmacked how this actually really works and how it works at a big boy level. You know, as you're kind of working through each of these phases of the project, you don't really ever sit down and kind of think about where you've come from, what you've done, or the ramifications of it. And I remember sitting there with my wife and we were talking, and I just said, I was like, look at the state of the world. I said, look at the state of the economy. We're on the verge of World War III. Inflation's through the roof. Well, our house prices are through the roof. I said, people are throwing $110 million of debt at me. I'm like, no wonder the whole world is going to shit. So that was a huge, like a huge light bulb moment. And then again, it just kind of brought me back to thinking about 2008. And my mum, my mum has ran her own successful financial mortgage business for 30 years now. And like everybody got killed during 2008. And kind of like our thought process and my thought process as I've kind of gone down this road is that if we look at the SME space, right, it's responsible for 80% of the world's GDP, and it's the most underserved space on the planet. So with just going through this process and having access to these people, building relationships, right? Like I've been building relationships with all these people. Like our thought process and long-term impact after this project is, listen, now we're kind of in the inner circle. We will take as much money as we possibly can get from these people and we'll deploy it into the SME space. Do the deals that, like, I think we've got about $1 billion worth of deals that we could potentially fund.
Hey there, Hot Exit family. Today I'm thrilled to talk about Snowball, our incredible new sponsor. This community is more than just an investment hub, it's a place where growth is holistic. A private community where top entrepreneur investors share private deal flow, wins, tough lessons, strategies, get advice, and so much more. Snowball is a network rich with like minded, experienced entrepreneurial minds, including investors, founders, CEOs, and doers all dedicated to meaningful growth. Snowball threads are like a daily masterclass. This isn't just about financial success, it's about enriching your entire life. If you're looking for a community that supports your entire entrepreneurial journey with shared wisdom and collective support, check out www.snowballclub.com. I believe their approach to compounded growth in wealth, health, network, and relationships could be the game changer you've been seeking. Let's grow together with Snowball.
So that whole experience has kind of opened my eyes a little bit to what it really takes, first and foremost. And secondly, how the game is played and then understanding those things. For example, it was about a year ago. So we were in New York, me, Carl, and some of the team we flew into New York and we were having like we had about 18 meetings with investment banks. And one of the things that kind of it, like I said, is my superpower. I'm good with people. So we ended up going up to Aegis Capital. They're like a small middle market IPO shop. And we come up, we get out of the lift, and there's like six of them all in suits, all very stuffy. And one of them pulls out a business card and he gives it to me. I said, guys, I said, it's 2023. Just give me a phone number. No wonder you guys are burning through so much money, wasting it on paper. And that just cut the ice, right? They all started laughing. And then that changed the tone of the conversation that we had with them. Like they were really, what's the word, receptive to it. They loved the project. They thought I was funny because I was, joking around with them and trying to break the ice. And really, we learned so much in a short space of time with this project that I think I spoke about this yesterday with Carl because we had a phone call. And I said, I think the work we've done in 12, 14 months is about 5 years worth of actual like education just by being out in the field and doing it.
I totally agree. I had a startup. I don't want to talk too much about it because it miserably failed, but I had to the point where we created the software. I'll just say it. We created an online dating system that was supposed to keep people honest inside of their profiles. It was called Honesty First. Started getting a little traction in the fact that we had people signing up, not a whole lot, but I
Mm.
was raising capital to do the marketing. I'd already built the software. I'd already raised the money through angel investors and myself, my own money to do the investors. But when I went out to the VC firms and, pitched them, every pitch I had to go back and go, "What the hell is it?" Like, they'd say things during those pitches, "What does the current cap table look like?" What the hell is a cap table?" I had to go back and look,
Mm.
you just nod and go, "I'll get the answer to that," and it was like you learn so fast because there's terminology and language, and they'll ask questions you don't even not only know the answer to the question, you don't know what they're asking until you go Google it, right? You don't know, "Oh, hold on a second," Google in
Oh
front of
yeah.
them.
Oh yeah. I've had a couple of instances in meetings like that. Like I didn't have the answer. I you
Mm,
feel stupid, right? Like
mm,
I had many of those experiences, but the thing is, I didn't stop. Like I carried on and carried on. I kind of learned from those mistakes and things that I didn't know. And
mm,
luckily, and you touched on this earlier, I did a masterclass basically for people in Carl's space, just to
mhm,
tell them, like, show them my background, right? I'm not anything special by any sense of the imagination. Definitely you're not the smartest person in the room. I said, but I will take consistent action and I'll learn from that. And then I'll just continue to go. Like I'll just keep showing up every single day. And then ultimately all of those singles ends up being a big runway, which is kind of where we are now with this business. Like we're at the add cash and stir point for this business. And the three acquisitions we have on the table right now, one we're going to close, I'd say latest end of April, just waiting for the quality of earnings report to come through. Again, cash at close 5 million, 16.5 million total consideration. So and they're doing 6.2 million EBITDA. So it's just under a 3 times X that we're buying that business for. The other one, which I can't say too much about it, is huge, huge business. They're doing 40 million a year. We beat 11 other people to be the preferred buyer. So we're trying to close that as soon as possible too. And then the final one, again, because we had to like, I realized that my time would be super limited, right? And if I'm going out and I'm having to learn on the job and I'm having to raise all this money, I can't also be out there looking for deals. So we actually built a deal team. We used a bit of AI and a couple of my partners, they built a deal team. And they brought us a deal 3 weeks ago. I won't say the name, but they are obviously within our remit. They do $40 million a year, 4 million of EBIT, and they spend zero money on marketing, nothing.
wow.
So I was blown away by it. So those three businesses that we have right now gets us to about 11.5 in EBIT. And then that kind of gets us to the next phase. And again, it's like the next phase is things that I personally haven't gone through. So I'm going to have to lean on the advisory board and people in our immediate circle to really find these women C-suite executives because that's going to be key, right? The first getting to phase one is fine, and then I need to get out of the way. But then who
Yeah.
we put in these seats has to be like premium A players to drive it to the market cap.
I was gonna ask you, when did you start that? Because executive search can take anywhere from 6 months to 18 months to find a great executive. So, that's just it's statistical, so you can beat that statistic, of course. But, I was wondering when you guys were starting the process of, like, vetting potential C-suite female or sorry, women, whatever they wanna
Yeah, there we go.
what
Yeah,
whatever the current I'm really horrible with all this new gender identity stuff. Whatever they wanna be called, I'm good
yeah.
with it. I'll call you whatever. Just tell me ahead of time so I don't get myself in trouble. That said, I just curious, how early in the game. So you guys are starting to look at that now because you can see on the
Mhm.
horizon you're gonna need those people. People ask me all the time, what are the top traits I need to be a great acquisition entrepreneur? And I always say number 1 is the ability to build rapport with other people. And then I think you brought up the second one, which is totally drawing a blank here, building rapport with people, and then just the ability to make that connection. And
Building, yeah.
there's got to be a better word for it than tenacity, but the maybe there's not. The ability to
Yes.
take bumps and bruises and figure it out and keep going is it's almost I don't know another better word than the
So
tenacity.
something that we coined here is patient persistence.
Patient persistence. Yeah. That's
That's what
tenacity.
we've coined here.
Yeah. Tenacity may carry a little bit of what do you call it? What's the word I'm looking for? Rowdiness, or a lot of people associate tenacity with kind of bold or whatever, but I'm just talking about the persistence, all right? The
Yep.
ability to just persistently go after something and not give up and try a different angle and try a different angle. That's the key to this because it is absolutely a numbers game.
It is, and you have to be able to pivot and have the ability to understand when things are not working, and you have to change tack, right? Like
Mhm.
we've had to pivot dozen or so times during this business as we as we complete one part of the process and we move into the next part, something shifts. It always does. So by being flexible and understanding the longer goal and kind of where we want to be, it allows us to adapt fairly quickly. I mean, there's so many things that I personally don't even know, right? Like if we're talking about, it'd be great to have a publicly listed company, but I've never been through that process before. I don't know what that looks like. I can imagine it's probably one of the most stressful things in the world. And ever since I embarked on this journey with Carl, this has probably aged me about 20 years. I'm only 25.
I interviewed, Dominic Wells again yesterday, and he took on Folio Public, and we talked about that a little bit. There's some brutal stuff that happens that you just kinda have to have thick skin for the first couple years you're public too.
Mm,
Any small cap, medium cap public company can kinda gets bullied by the market. They'll short you just for the sake of shorting you, and then they'll say bad things about you to try to drive the
mm.
thing down because they shorted you. There's games to play. If you wanted to meet him, I'd introduce you guys just because 'cause he's
Yeah,
been
that'd be
through
great.
that realm. But yeah, I've never aspired to be the CEO or in control of a publicly traded company. And I'll tell you
Mm,
why, and I wanna know what your thought process is. I think that publicly traded companies is the one flaw that's in our capitalistic society here, and the reason I think there's a flaw inside of it is well, just pick a name brand everybody knows, Hershey. If you were we talked about
mhm.
this on the show I recorded the other day too. So this be if you're listening to back-to-back shows, you're gonna hear the same conversation real quick. But from a different perspective, I wanna hear your input on it. If you're Hershey and you're doing $2 billion a year, I don't know what their numbers are, I'm making a number up out of my head, so I don't know what they do. And you've been doing that for the last 10 years, should you be penalized for not growing? If you could produce 100,000,000 or even, like, $1 billion a year, year
Mhm.
after year after year after year, can you be penalized for or should you be penalized and lose your job as a CEO because you just maintain the status quo? In my world, it's no, you're running a
No,
hell of a machine. But in the current
yeah.
stock market and the current capitalistic way the stock market works, you'll lose your job because anybody that bought your stock today expects it to grow or they don't make any money.
And here's the thing, like if we look at the big four, right? The big four
Mm,
drivers. We've got Tesla, we've got Apple, we've got Facebook, we've got
mm,
sorry, five, Amazon, right?
mm.
Like these guys are growing just through acquisition. They are buying tons and tons of other companies, right? They kind of hit that. There's a ceiling and a plateau and level that they hit, right? Because yes, you can release products every year, but you will hit some sort of ceiling. So how do you grow? Well, the quickest way to grow is just by acquiring. And if you look at their transactional history, they just acquire, 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 acquire.
But if and I agree, and I think one of the reasons why if you look at that mid cap and large cap acquisitions, they have such a high failure rate on the
Mhm.
integration is because they're almost required to acquire companies that may or may not be a perfect fit for the sake of growth. If you
That's
could take
exactly right.
away if investor sentiment would say, "Hey, I would just love to have great stock," like our grandparents really loved, at least you know, the previous 2 generations before us would love a stock that just produced great dividends every quarter and just paid a regular income. A lot of people built their retirement off that. If that was still the sentiment, people were looking for companies that just did a great quarterly dividends, then you could be a
Yeah.
company that just cranks out the same thing every year. Because of this
Mm.
absolute need to grow, I think companies, mid cap and large cap companies are making acquisitions they may have not needed to or probably even should have made because the culture fit wasn't there, or there were red flags, but they went ahead and did it because it added to their bottom line for the day and got them to the next quarter of growth, and they got to keep their job as CEO because they proved that they grew 20% quarter over quarter or whatever the number was because they bought that company.
I think you're absolutely right there because the only thing that Wall Street cares about is the next quarterly numbers. So you have to validate, verify, and then show some sort of growth, right? Like if you're flat or you decline, because there's hell to pay. And again, there's a lot of responsibility and liability that comes with being the
Mm.
CEO of a publicly listed company, right? Like it's quite it's a huge task. Obviously, it's a feather in a professional cap, but it's not something that I ever want to be. No way.
If I ever get involved in another huge project, like a 500 million to $1 billion project, my goal would not be to take it public, but would be to grow something that would become an ESOP, right? You still have a decent exit. It's still valued at current market valuations. And it's sold to the employees and they get to run it. And then you can maintain, and there's so many tax advantages of that. It's insane, right? It
Yeah.
becomes a tax, you know, a tax shelter for a lot of the income that's made because of the way it's structured. That said, you can sell 80% of it and end up owning a 20% equity in a company that's run by its employees from that point forward. And your model of running businesses, EOS, if you pair that with the guys that wrote the book called The Great Game of Business, where they trade people to be great employee owners, the combination is an amazing combination inside of a business. I just took on an advisory role for a roll up where I'm a partner in their company. We're buying cabinet making and kitchen and bathroom remodeling companies. So that's what my time is now. But before that, you might even see in videos I was putting out where I was looking to buy companies who, for some reason or not, couldn't figure out the ESOP model. Maybe they didn't have enough time because they didn't think their employees were quite ready to run it. But I was looking for companies
Well,
that in the long run, the owner would like to see the employees own it, but for some reason they need to sell now because I was going to
mhm.
commit to them that I'll grow it into that.
We like that model as well. Like we're big on we're big on consistency, right? So
Hmm.
like when we come in and we take over a company, we don't want to change anything that they're doing well. Within this project, we've got like a 5 profit pillar mechanism that we have. So we go in, the first thing we do is implement that, make sure all 5 are done. And then we always look for internal talent, right? Nobody knows the business better than the business owner or the executives that are running it. We like consistency. We like to hire up within, promote within, and keep that continuity. And as you say, like we'll give a portion of equity in that business to that person who's going to run it because then they've got skin in the game, right? Like that they're more invested in it.
I will give you the kudos or the credit that with what you're building, I think in the current social economic environment and what the culture where the culture is now, taking a women run or woman owned company public would land really well, and I think that the stock market would eat that up. I really do.
They
So,
kind of already have. So
yeah.
one of the things this year is we're actually going to be on the Going Public TV show.
Mhm.
So we need to close on the 3 that we have on the table right now, get us to a position where we've got at least half of the board, the half of the executive team identified. But then we're actually going to be on this show. So that's going to just raise the profile of it. And also Miami being like a huge the new tech hub, like they're bringing in Apple, Amazon, they're really trying to drive digital commerce. So Venture Miami love what we're doing because we're putting money into female founders, right? And we're building a female founder C-suite. They're backing us, so we're going to open an office in Miami early next month. And the mayor is having a welcome ceremony for the business. His wife wants to be on our board, so it's interesting times. And I think it's again, it's timing, right? Like it's timing. We've hit our story is a great story. It's hit the political timing element and it's resonating with people. So like if you hit those things, and obviously the numbers look good and the thesis is validated, etc.
It always sets me back just a tiny bit because if anything that you couldn't do the counter of, there's something about it. So you couldn't go out and say, "You know what? We're gonna create a white male over 50 ran company." Well, no, there's a million of those already, but if you went out and announced that and said try to raise money and said, our entire suite's gonna be men over the age of 50 that are of Caucasian or whatever, or what the standard is." If you looked at the top 100 companies out there, what their board of directors look like, it's starting to get better now, but over the last 50
Mhm.
years, you would see that that's the predominant thing. That would not land very well, right? And
No.
this whole thing where you can say one thing but not the other has always set me back a little bit. I always there's some really cool clubs out there doing really cool things, but it's all women ran. It's like, man, that's a really cool
Mhm.
thing. It's too bad, but you can't do the same thing. I remember I was a member for a while of the Rotary clubs, and for most of history, Rotary is all men. Now, when I
Mhm.
joined, there were women were allowed, but they still carried that stigma. This used to be a men's club, and there was a little bit of hate in the world for Rotarians because that's what it used to be.
Change of the times, right? Sign of the
Yeah.
times, sign of things are changing. I think I read somewhere, or maybe as I was talking to Devin, but female funds were outperforming male funds by like 24%. And as much as, well, it doesn't pay me to say it, but I think to a certain extent, women are better leaders. They're
They
more
are.
empathetic. They're prepared to listen more. They're better at conflict resolution. What we're lucky, kind of like within our organization, and I had to learn this very quickly and very harshly several years ago, that it's always best just to shut up and listen and let people express what they want to express. Like we've literally got no egos within this business. Like if somebody comes up with a better idea, great, right? Like we don't tolerate. We have like an energy mandate within our organization, right? People need to be really bought into the project. They need to really love the vision and be rowing in the same direction. Like we've had to remove and fire several people from the project because it, it was just the negativity around it would have a knock on effect. So I think from a women's perspective and a women, and again, obviously I can't speak for women because I'm not one, but from kind of what I've seen, I think they make better business leaders.
I think that I'm a big fan of the underdog. So whether it's women, minorities, or whatever, I joke around and say I'm the whitest guy in my family. Everybody in my family is Native American. So I show up to an event, they're like, "Who brought the white guy?" So I'm a card carrying Cherokee, but I look like my mom and you know. So my dad, if you ever see a picture of my dad, he's really dark skinned Native American. That said, I'm a big fan of the underdog. I really am. I'll hands down help anybody who's an underdog, whether it means minority, female run, they have something to prove. If you give me 5
Mm,
people and they all have equal resumes and the skill sets are the same, and somebody has something to prove, I want that guy because there's a different
mhm.
drive for somebody who has something to prove. And as a
There is.
female or woman in a business, they have something to prove. At least they feel they do most of the time. I don't know that it
Mm,
should be true, but they do. They feel
mm,
that way. So then there's the drives there, right? And the what's the word I'm looking for? Self-entitlement, the ego that comes along with a lot of the people who
mm,
don't have something to prove, like they're owed something, that just
mm.
sets so wrong with me. So that's one of the reasons I love a good underdog. I'll help anybody out there who is swimming upstream.
My biggest turn off is definitely entitlement. Come at me with that kind of attitude. I'm like, oh no.
Yeah.
But yeah, I mean, we're in a really it's funny because it's kind of like we're in such a good position within the business right now. And it feels like the calm before the storm. Like I know the next 2 weeks are going to be incredibly hectic. And then finalizing like the rest of the capital element. And we're going through our Reg D process right now because we need to have 300 shareholders to as part of the SEC requirements, right? So we're just going to do a Reg D, Class B shares, all that kind of stuff. So we're going through that, and it kind of is a little bit calm before the storm. And I know the rest of this year is going to be pretty hectic, and it's stuff that I've never gone through before. So I'm going to be learning a whole bunch along the way, and I'm pretty sure I'm going to make a ton of mistakes. But like within any business, I guess you're only 3 or 4 bad decisions away from going bust, right? And sometimes within this business, at different times of kind of where we are, it's felt like we've been an inch away from glory and an inch away from disaster. That's kind of how
Yeah.
it feels all the time.
There are parts of this industry, when I say this industry, or entrepreneurship through acquisition, mergers and acquisitions. There's parts of it that are art and there's parts that are science. So you've already got the one of the things I think are art is rapport building and people skills. As a true art, you seem to have that down. That's one of the areas I love to do. And the second one is that, the financials are science. I mean, you can be good at math and stuff. But the other one is, and it comes back to rapport and people skills, that integration is an art,
Mm,
and it's really understanding culture, understanding and listening to the people, figuring out what they want and what they change. You know that, and you've got something here. The reason a lot of these big companies fail is that integration model, but you've already got the
mm.
core basic skill of that people skill and that listening. If you can just carry that through, I think you've got something.
I appreciate that. I think that integration and the people element gets lost on a lot of people, right? You've got to remember that business is about people, whether it's
Mhm.
customers, whether it's your employees, whether it's your investors, it's about people. So ultimately, you need to come across as you need to be likable, Your project needs to make sense. Your business needs to make sense. But then you also actually have to give a shit about people, like care about the people who work for you, care about what they want, right? Because I think a lot of people get caught up in like employees working for me. I think if you look at the shift, more and more people are kind of quitting their jobs, they're doing their own thing, which makes it even more important to create an incredible culture within the organization that you try and build and actually care about people because they're going to drive all of the shareholder value. They're going to drive the growth. It's not going to be me. I can't do it.
One of the reasons I love that ESOP model is I think the reason a lot of people are leaving the corporate world for their own gig is they need to feel a sense of ownership. They need to feel a sense of control of their own future, their own destiny, especially in uncertain financial times. I think that being
Mm.
an ESOP gives them some of that in the realm that they can see, especially if you train them well. I love the book, The Great Game of Business, and those guys, they do training just like EOS does. They have people that come out and really affordable. I think it's groups of 4 or 6 people. It's under 6 figures. It's really
You have to send me a link to that, please, Ron. I'd
I
like
will.
to check that out.
I'll introduce you to the guy that runs their training. It's Steve. I interviewed him on the show here, but I'll introduce you. I'll make an
Perfect.
introduction
Thank
on
you.
LinkedIn. But, it's a great way to people to understand where they're at in the business and how they contribute to the business. It's a fairly popular book that was out. It's been out. They've actually acquired over 60 companies themselves implementing their own model, and they do a lot of turnarounds in low margin companies. You call it, when you take used auto parts and you fix them and make them new again. What's the word I'm looking for?
Refurbished. Yeah.
Yeah, they refurbish things from turbos or whatever, so these things have profit margins of 1, 2, 3% of over the entire company, so they have to run really efficiently. So the great game of business is they've gamified it. They've taught everybody in the company, all the employees, what their day-to-day tasks do to the bottom line, how to read a balance sheet, how to
Mm.
read a statement, and what when they come in and they make that widget, what does that do to that balance sheet? What does that do to that financial statement? And everybody gets that,
Mhm.
and, there's a book out they wrote, and then they have a training, system, but, I think that coupled with EOS and that coupled with potentially being an ESOP or a publicly traded company even, is one heck of a catalyst, and you might be able to overcome that need people have to have a sense of control over their own destiny and their own future and wanna leave and
Mm.
create their own thing. The entrepreneurs are gonna be entrepreneurs. You're never gonna put me in a
Of
cage and
course.
have me work long term in a company for more than a couple years, right? I'm gonna break out and do
Mhm.
my own thing. You're probably the same way. Some people are just naturally entrepreneurial. They have the desire to create.
And I will say one thing just kind of before we try to wrap this up. One of the big things in terms of like culture that we have in here is we, especially within our space, right? We don't
Mhm.
believe in a 5 day work week. It's 4 days, Monday to Thursday, because we want our people to be recharged, enjoy their time away. There's no need to work a 5 day work week in the business that we're in. It's just unnecessary.
I got it. Well, we are, past the hour now, so let's just do this. How do people reach out to you if they wanna work with you or wanna hear more about this or, if there's family offices listening or whatever and they wanna get involved, or they wanna follow your story? What's the best way for people to follow along with what you're doing?
Really, I'm not really a big social media guy. I've got an Instagram account which has one post on it from my wife. But you can reach out to me on Instagram and it's I am Ross W
Mhm.
Turner. And also on LinkedIn, the same I am Ross W Turner on LinkedIn.
Is anybody on your team gonna, like, carry the story and share the story, as it grows through one of the do you have somebody on the team that's gonna build a social media profile and let people track what's
Yeah,
being done here?
we will. Yeah, it's like so phase two is part of the move to Miami, the female founders pitch, which we're gonna do. We
Mhm.
have a full social media team and like they're gonna
Well, you're
document
gonna be on a
everything.
TV show, so they're
I
gonna
know,
do
I
that
know, I
for you if you
know.
don't.
Yeah, well, yeah, I will be on that. So me and Carl will both be on that. So that's going to be a bit strange because I'm not really a limelight kind of guy, but
Yeah.
it's good experience.
But, no, I
Well,
do appreciate having you here today. This was brilliantly enlightening, and it was a fun conversation. If somebody could walk away with 2 or 3 takeaways, and that's all they could remember from the show, what would you want them to remember?
is one big thing. Learn to be really, really good with people. That will take you much further in life and business than anything else. Skills can be learned, right? There's an art
Mhm.
and a science and a nuance to be really good with people. And
Yeah.
I'll just give a quick example before we wrap this up. you can kind of buy your way into these rooms, and I alluded it before. So you can go on mental pass, right, and pay $500 to have a meeting with someone prominent. This is what 90% of the other people do. They get on the call and they go, "How can you help me?" Me, 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 me. And they hammer these people. What I do beforehand is I'll go and see what they've been up to. Say, for example, I've set a meeting with you, Ron, and you and your family have been to Hawaii. I'll start the conversation with, "Hey, Ron, I just see that you come back from Hawaii. Me and my wife are going to plan on going there for our wedding anniversary. What was it like?
Mhm.
What did you do?" So they're already opening up, having that conversation. And then I start the conversation with, like, "What problems are you having right now? And is there anything you need help with that I can help you?" And that just changes the conversation. So instead of it's like, "What can you do for me?" I'm actually interested in that person. And one of the big things that I've done, that we've done, is we never make that first meeting transactional. We never do that. We're like, do we like each other? Because not all money's created equal, right? Like,
Mhm.
it's just not. So if I wouldn't have you in my house, have a beer with you, go for dinner with you, then I certainly don't want to do business with you. And I certainly do not want your money. No way. So by being good with people and really like understanding that, it will take you so far in life.
Yeah, I am 100% on board with that. Rapport is the top thing. I tell acquisition entrepreneurs all the time. Even the team I'm on now is like, look, our first call has nothing to do. We're never going to talk about numbers. We're not going to try to figure out where they're financially. Like, what do you want to sell your business for? That's not the question. The question is,
Hmm.
what problems you have right now? What are you trying to accomplish? Right? I have a
Hmm.
sense of humor that can ask questions that a lot of other people can't. One of my favorite things to do is like, out of all the people you can be chatting with today on the phone, why would you be on a call with somebody who buys and sells businesses? What is it you're wanting to do? My goal isn't to buy your business and get the best deal I got. My goal is to figure out where you're trying to go and help you get there. And if that happens to be me buying it, that's great. And if it doesn't, I probably with my network and the people I know, I probably know the right guy. So let's have a conversation of more around what you built, what's cool about it, what's the struggles within it, why you built it, and
Hmm.
then where you're trying to get to. What's your goal here? And if I can help you achieve that goal, that's awesome. That's what I want to do.
Yeah, I love that. That's very powerful.
I appreciate you. I think we can call that a show. You have any final
I
words you want
think
to
we
say?
can. I think we ran over. Appreciate you, Ron. Thanks for having me.
Awesome. I want to announce our new channel partners, the ITX Marketplace. Since 1998, ITX has created $5 billion in value by selling more than 225 IT businesses in 20 countries. ITX works exclusively with IT-enabled businesses generating between 5 million and 30 million who are ready to be sold, and M&A decision makers who are ready to buy. For over 25 years, ITX has developed industry knowledge that helps determine whether a seller is a good fit for their buyers before making the match. ITX Mergers and Acquisition Marketplace we have partnered with has a proprietary database of 50,000 plus global buyers seeking IT service firms, managed service providers, Microsoft service providers, software as a service platforms, and channel partners with Microsoft, Oracle, ServiceNow, and the Salesforce space. If you have an IT enabled business you're ready to sell, I want you to visit the itexchangenet.com/marketplace. How to exit. That link will be in the show notes. Visit them now.